Welcome back. I'm Pratap here. Today is the 21st April 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please note we are providing complete free training on supply demand zone price action. And you might be knowing it is a highly expensive training course, but we are providing complete free training and all the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. So you just click on this link. Now we are into Supply Demand Zone Price Action course YouTube playlist. I kept all the training lessons in this playlist. You need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one, but according to my training instructions. Training instructions are available at our NeoStock Telegram channel. I provided the link to our Telegram channel in this video description. So join at our Telegram channel. At the Telegram channel top of the window, you can find pinned messages. Go to the pinned messages. One of the pinned messages are having all the training instructions. So please learn this course according to those training instructions. Then you will become a very good independent trader in the coming months time period. Now let's get into performance evaluation of high liquidity zones. The last trading session we identified 1, 2, 3, 4, 5, 6, 7, 8, 9 high liquidity zones. Unfortunately, we did not get any trade opportunity, but this is one stock. Prices came very close to this zone. There is one more stock, Supreme Industries. Previously, we took the trade in that zone. That zone is violated today. Apart from that, we haven't got any trade opportunities. Let's look into this. First of all, this is the Ambuja Cement. So this is a drop, base, drop. This is what our software identified. And this 75 minutes, this daily zone. This daily zone is fine-tuned with 75 minutes time frame. If you look into the 75 minutes time frame, here we have a rally, 2 base candles and a drop candle. This is the 75 minute zone. And this 75 minute zone again fine-tuned with the 15 minutes time frame. Excuse me. So within this 15 minutes, here you see again drop, 1, 2, 3 base candles and again a drop candle. This is the 15 minute zone. If you go to the 5 minutes time frame, see the 5 minutes structure is not at all good. Drop candle. But from where it pick, see from here, from somewhere they are picking the orders. So if you go back, you can find the 5 minutes horizon. Look into this. Here you have a rally candle. Even you can add the hidden body, it's a rally. You have 1, 2, 3 base candles and a drop candle. See, after that again, immediately next candle, again they picked up the orders and came down. Some rejections you have seen, but they are not significant. But this zone is horizon for this entire 75 minutes fine-tuned zone. See, from there, from the origin it picked up. Again, from here only it pushed the market down so sharply. That means this is the area we have strong institutional order flow. See, from the origin again, on Wednesday, 11th December, again sharply prices went, and then from there it moved down, and again it gave you a big move. And today again prices came to that near to the origin, but we didn't get the trade opportunity. Some more movement, if it would have been there, maybe another 2 rupees from here, we would have got a trade opportunity. After that, prices were moving within this area only today. A small range they are moving. So that is the way we missed the trade opportunity from this stock. There is another one, Supreme Industries. This is also daily high liquidity supply zone. Already we fine-tuned this because we got a trade from this. I think I have explained this on when we got the trade on 28th March. If you look into 28th March HLQ analysis video, we discussed this analysis. But anyway, how our software identified drop base drop. So on 28th March we discussed this. And 75 minutes time frame. Actually 28th March what we did, initially identified a high liquidity zone here. After that I think I have explained you in the reverse engineering. Let me directly go to 5 minutes time frame. First we have drawn this in the analysis video. This is the zone identified as an aggressive trade setup initially. This is the rally, 3 base candles and a drop candle. From here again rally, base, 4 base candles, a drop candle. From here again you see rally, 1, 2, 3, 4 base candles, medium size candle is also part of the base, drop. LOTL zones are getting created. This is what happened on 27th March. After that prices closed somewhere here, and our software identified stocks near the daily high liquidity supply zone. On the next trading session on Friday 28th March, we got the trade from this zone. After that prices moved very sharply and gave very good trade opportunity up to here. If I show you the Excel sheet, (28th March) HLQ. This is the date we have to check. 28th March. Yeah, see here, Supreme Industries. The same stock. Supreme Industries on 28th March, it gave us a short trade. The 5-min HLQ supply zone trade inside the daily HLQ zone. So from this area, it gave a trade. On that day, it has given you 5.1 5.1 ROA it has given. This is the stock. But did you notice that day prices came somewhat deep inside? But HLQ zones, we never know. Once again, it may give you trade, but until one day it gets that expiry date. Until that day, you enjoy the profits. See, earlier already we took the profit. What about today? It may work or it may violate. If it works, it gives you good profit. If it is violated, small loss you will get. And if you deduct that money from your previous profit, still you will be profit from the previous trades. This is how you should trade in the HLQ zones. What is the HLQ zone strategy? The fine-tuned 5 minutes. We keep on taking the trades until the day it is violated. Because HLQ zones, we never know when they will be violated. Sometimes first time itself they will violate. That way you get stopped out. That is a clear stopped out. It gives you one test and then it will stop out. That stop out you won't care because already you gained profit from this zone. Sometimes it will give you two profits from the same zone and then it will stop out. Sometimes 4 times, 5 times, 6 times also they give you profits. That's why HLQ zones, when you are planning your trades, we keep on taking the trades until the day it violates. The day when it violates, okay, we are happy with that because earlier we got the profits. So that's why we don't consider the day when it is stopped out. We won't consider that as a failure of this zone. The reason is HLQ zone nature itself is like that. But first time itself it is violated, then we will consider that is a failure from that zone because it haven't given any successful trade. But this one gave you several times. Maybe we captured here, but at the time of zone creation, see here, it gave a very good profit. Next time, almost the same level it reached. That means HLQ zone, this zone is pushing up to this much level. And today what happened? The zone is violated. So those who have taken a trade today, it would have been stopped out. Your trade would have been stopped out. But we have to live with this because earlier we might have enjoyed the profit here. How much profit it gave earlier? Supreme Industries gave you 5,262. Maybe today you might have got maybe 1,000 rupees or 900 or maybe 1,100. It won't be more than that. So compare it to this profit. If you deduct from the earlier profit, still you will be in profitable from the zone point of view. I'm talking about zone performance point of view. This is how we should deal with HLQ zones. This is the way some of our subscribers are trading with HLQ zones. They always prefer trades only in HLQ zones. See, it is different people's different trading styles. But what I say is, wherever opportunities we have to take. Whether it is fine-tuned zone or HLQ zones or aggressive trade setups. Anyway, aggressive trade setups, I'm not letting you to take because many people are making mistakes in the earlier stage. Only fine-tuned zones and HLQ zones only, you have the permission to take the trades until you get good experience. Okay, except this remaining all, let me quickly go through. ICICI GI, it is a daily high liquidity demand zone. This is how our software identified. Rally, 3 base candles and rally. And this one is fine-tuned with 75 minutes time frame. Here you see drop, 3 base candles and rally, and then a quick follow-through candle, dynamic candle, rally candle. And this 75 minute zone again fine-tuned with 15 minutes time frame. See here you have a 15 minute zone. Drop, base, rally. This is the 15 minute zone. Within the 15 minute zone again fine-tuned with 5 minutes time frame. See here 5 minutes time frame, if you would have noticed, to drop, base, again base. Structure is not clear. That means the same 15 minute zone again you have to draw the zone. Then rally and a follow through candle. That means almost 15 minute zone is same as 5 minute zone. So that's why what we have to do, when 5 minute structure is not very clear, then you can go to 3 minutes time frame. So that is what I did. I went to 3 minutes time frame. In the 3 minutes time frame, we have an excellent 3 minute zone here. So here you have a drop candle, 2 base candles and a rally candle and a follow through candle. And this is the area we got a trade on 11th April. That is the last candle, 1527. It took the trade, consumed the order. See, prices went almost close to the distal line. So you can't take a trade from this zone. That's why this is not a valid zone for planning your trades. This zone should be violated. unless institutions create a new order flow within the zone and again push the market. It looks like, see here, a new zones are created and pushed. But go to the 5 minutes time frame. Still you can draw drop, base, rally, right? Reverse engineering. But go to 15 minutes time frame. It is a pivot, drop, rally. Go to the 75 minutes time frame, it is a single candle. This is the one. So that is the reason why you can't plan the 5 minute zone. That will be like an aggressive trade setup. Aggressive trade setup without proper price action clues, you can't take the trade. Otherwise, these zones will be easily violated. So that's why you can't. Next time again prices reach here. A new 75 minutes, inside new 75, 15 minutes, inside 15, 5 minutes, and they push the market up. Then next time you will be planning a trade. Otherwise, this zone will be violated. That is what you learn in lesson 16, when a zone will be violated. Ambuja already we discussed, Ambuja Cements. Next one is Ashok Leyland. Ashok Leyland, this is a drop, 2 base candles and a drop. So I want to fine tune with 75 minutes time frame. Go to 75. Here you have a 75 minute zone. Have a drop, 3 base candles, and again a drop with hidden body. But did you notice I didn't draw any 15 minutes inside? No fine tuned 5 minutes. Why? That we will see. But meanwhile, here you have again a drop, base, drop. From here it picked up the orders and an entire zone is created. So that means this 15 minute zone is the lower time frame zone horizon to this. This 75 minute zone is the lower time frame zone horizon for this entire daily zone. So that's why again this horizon also you should fine tune with 15 minutes time frame. But before that, first you look into this. Why I did not consider all these are all large candles. Let me hide this big candle, you will get clarity. See, all these are all large candles, failed ERC candles. You can't use failed ERC candles inside the base. This is a rally, base valid, but all these are all failed ERC, large candles. You can't keep large candles in the base. You can keep medium-sized candles. Medium-sized base candles you can keep. If there are earlier base candles, medium-sized leg candle also you can keep inside the base. If the following candle is a leg out candle, medium-sized leg candle you can keep. But you can't keep large candles inside the base. You already learned small candles, medium candles and large candles in your course. So large candles means ERC candles, whether that is ERC or failed ERC, they are not eligible to keep inside the base. Inside the base you can keep only medium-sized base candles or small candles. Even complete body filled small candles also you can keep inside the base. But only thing is medium-sized candle, leg candles you can't keep in base, but there is one special condition. What is that special condition? Leg candle you can keep in the base, medium-sized leg candle, provided if there are earlier base candles are there in the zone. Only in that situation you can keep. Remaining all situations you can't keep leg candles inside the base. So that's why I didn't draw the zone here. Okay, fine. Then what about this one? Here you have a 75 minutes horizon. So that 75 minutes horizon we need to fine tune. So that's why I have drawn a 15 minute zone here. Drop, 2 base candles and again a drop candle. Now this one again fine tuned with 5 minutes time frame. In the 5 minutes time frame, here you have a rally based drop, the 5 minutes horizon, and also within the same 15 minutes, a rally based drop is also created. This is a fine tuned 5 minute zone. But this is the LT of horizons fine tuned zone. This one is already tested, picked up the orders, came down. Second time, once again, it is tested. LOTL zone is created here. Again, prices came down. Here again, rally base drop. Why I have drawn this zone? Just want to show you. This is the area is acting as a high liquidity zone. This is the aggressive trade setup. Because this is not the fine-tuned 5 minute zone. Prices came down, again second time tested, came down, again third time tested. Probably this is the area you can plan your HLQ zones, aggressive trade setup. But before that, this zone has to be violated. But it doesn't have a proper structure. See, proper structure, is it going to be violated? 80% scenarios. But what about 20%? Institutions may create a new fine-tuned order flows inside and then again push the market down. Except that situation, remaining situation, this zone will be violated. But anyway, today we didn't get any trade opportunity. Next one is a Dabur. This is also a daily high liquidity supply zone. I think Dabur already we discussed in the previous video. This drop based drop, it doesn't have any fine-tuned 15 and 5 minutes. Previous video I explained. Anyway, today prices did not come. Please look into the previous video, how we have drawn this zone, why there is no order flow. Next one is the ZMR airports. This is also we discussed in the previous video, it seems. Drop base drop. If not, let me explain. Go to the 75 minutes. In the 75 minutes, we have a drop, 1, 2, 3 base candles and drop. And go to the 15 minutes time frame. You may not be seeing proper 15 minute structure here. See why there is no proper, you have a drop, no base candle. Such kind of zones will be violated easily. But what I identified? A 5 minutes horizon. See here you have a 15 minute zone. Rally base drop. This 5 minutes horizon for this entire daily zone as well as a 15 minute zone. But anyway, this daily zone is more important. That is very powerful. For that powerful daily zone, we have a 5 minutes horizon. From that horizon, picked up the orders and daily zone is created. See here, you will understand. You have a drop, base, drop. This drop, base, drop. This 5 minute zone is the horizon for this entire daily zone. See, daily zone picked up the orders from this zone. Came down. And this time you see rally base drop. LOTL zone is created from this horizon. And see how strongly it pushed. And now new orders also, further new orders also added because of this LOTL rally base drop. So that's why this is the area. And even here also see, rally base drop is created. Again new orders are added here. Several times this zone is tested. So once this is violated, prices will reach and then we can plan a trade here. But anyway, today prices did not enter. We didn't get any trade opportunity. Supreme Industries we discussed. Next, CAMS. CAMS is a 75 minutes high liquidity demand zone. See, this is a rally, 1, 2, 3, 4 base candles and a rally candle. Observe very carefully. I remember recently one of our members also asked the question related to this concept. In the previously, I think we got a trade also from that stock. Maybe Ramco Cements. Ramco Cement, he asked a question in the previous, maybe if you look into 17th HLQ analysis video comment section, you can find. The similar, whatever the question, I actually gave an answer, but the similar scenario you can see again here. So let me explain what exactly the question he asked. Let me go to the 15 minutes time frame. Let me delete this first of all. See, if you look into this chart, a rally, can you draw a base here and rally? Actually, he might have drawn a zone like this. Because based on the question he asked, I thought he might have drawn a zone like this. 15-minute zone. And inside a fine-tuned 5-minute zone, that was violated in Ramco Cement. But below there is one more that is worked out. Let me show you the difference. Probably, if I compare Ramco Cement, what we traded today, and CAMS today, if I compare both, you get clarity. So this is the one. See, rally, base, rally. The 5 minutes. I didn't draw the 5-minute zone here. Rally, base, rally, I didn't draw. Instead, I considered drop, 2 base candles and a rally candle. If you are not convinced this is the base, still you can draw a zone. This is the large candle. Large candle you can use as a leg-in. This is not a medium size. Large candle. 1, 2, 3, 4, 5 base candles and a rally candle. This one I considered as a leg candle. Leg-in. These 2 base and this is a rally. See, now you get clarity. This is a high explosive candle. That's why I have it. Because of this high explosive, scaling issues we will get. In this scale, the software programming issues we will get. So that's why I hide that high explosive candle. Now you get clarity. That's why I have drawn drop, 2 base candles, because here balance is there. Price moved in a balance. And a rally. If anybody did not convince this is a leg candle, medium size, and if you consider this as a base candle, still your analysis does not change. Why? Because this is a high explosive candle. This is a large candle. Large candle can be used as a leg-in. You have 1, 2, 3, 4, 5 base candle. In case if you convince this is a base, at the time you will draw zone like this. Your risk will increase a little bit. But how I drawn? Very simple. See, here price is moved in a balanced way. And this candle, medium size candle only. Still this is okay. But the reason why I considered, because this candle is having body more than 50%, but less than 75. Body more than 50%, less than 75, you can use as either leg-in or leg-out. You can use as a leg-in candle or base candle, depending on the situation. Leg-in means leg candle. So always remember, I think in Q&A session 15 and 16, I gave a very detailed explanation about these scenarios. Even how our NeoStock software works while selecting such kind of candles. That logic also I explained. Some extent I explained that logic behind how I developed, how software works. See, we have a situation. Candle body is greater than 50% but less than 75. If candle body greater than 50, you can't use that as a base candle. If the candle body is less than 75, you can't use that as a leg candle as per our initial rules. But this situation is like a different situation. What is that? Candle body is more than 50% and also less than 75. That means you can't use this as a base candle, you can't use this as a leg candle. Then how to use this candle? Either way you can use. Either you can use base or you can use leg. Depending on the situation, you can take the decision. You have the flexibility to take the decision. See, here I have the balance. Prices are in a balanced way in these two candles. Here imbalance started. So that's why I'm using this as a leg-in. That's it. Sometimes, because I did not consider, sometimes what happens, price may reach up to this level and again move up. I may miss the trade. Okay. Because if I draw like this, risk is a very huge risk I am getting. This is a perfect risk management point of view. See what happened, prices entered in this area. We got the trade. That is what happened on Friday. Okay, now what is our members' doubt? Rally, base, rally. Why I did not draw this? Rally, base, rally. Same situation you are seeing, but this is 5-minute zone, but here 15-minute zone. See, rally, base, rally. Why I didn't draw this zone? Now only I have drawn this. Just I want to explain you. Generally, based on this, comparing this, similarly you will also get rally, base, rally. Why we did not? What is the base candle rule? Body should be less than 50%. Okay, between 50 and 75% body you may consider, depending on the situation. But this is having body more than 75. Same is the case here. See, it is almost having 100% body. Maybe if not 100, maybe 95 or 96% body will be there. Some wicks might be there. Let me hide this candle. You will get clarity. See here. This is a medium size candles. See, this is a medium size candle, right? Almost same length this candle is also having. But what is the difference? Maybe this is a tiny candle, small candle. Small candle, see, by default you can consider as a base. But this is a medium size candle. This is also medium size candle. Medium size candle you can't keep inside the base. Same is the case here. This is the medium size candle. Let me hide, you will get clarity, this large candle. Now you tell me what kind of candle it is. Medium size candle. See, this is also medium size candle. This is also medium size candle. See, this is the small candle, tiny candle. Compare it to this small candle, this is a large candle. Medium size candle. This is the large candle, this is the medium. So a medium size candle, what kind of candle it is? Leg candle. It is not a base candle. How can you keep a leg candle in the base? One exceptional scenario is there. What? If earlier base candles are there, then this medium size candle you can keep inside the base. If it is also coming into the base, this candle, because earlier already base candles are there, they confirmed already institutional balance. Because of this candle inside in the base won't get any disturbance. But here, do we have any earlier base candles? No. So a medium size base candle, by default, you can't keep that inside the base. That alone cannot be a base candle. Medium size leg candle alone cannot be part of the base. If it is not alone, how we can keep? If there are earlier base candles before this, then you can keep this is also part of the base. Because of earlier base, we already got confirmation that is a base. After that leg out is there, you can keep. But here, there are no earlier base candle. This itself is how you have to treat. This is a rally candle. This is also a medium size rally candle. Now this is a high explosive rally. They're all like follow through candle. Rally candle, follow through candle, and another follow through candle. That's why you should be very careful. Sometimes, such kind of analysis will disturb your understanding levels. So properly you draw. That is the reason why Ramco Cement, I did not keep this candle in the base. It is not at all a base candle. Then what is that? This is a base candle, I kept it. I consider this as a tiny candle. Compare it to the base candle. Half of the size or less will be there. So consider. So that way you can consider this as a drop base rally. In case if you are convinced this is also a medium size candle, then you can draw rally, base, rally. Simple. This is the zone, perfect zone. You got a perfect trade here. That is what happened. But how I considered this as a draw, base, rally. If you convince all these are all base candles, then this is the leg-in candle. All these are all base. Your risk will be increasing somewhat like this. Still you get a trade here, see? A perfect trade. If RR is there, okay. If RR is not there, anyway, once again what you do? You fine tune your entry. Suppose if the RR is not there, 1:3. Still what you do? You fine tune. You fine tune up to this much level. That way you manage the risk, reduce the risk. The moment risk is reduced, automatically you will achieve the minimum RR. Anyway, it is a perfect fine-tuned zone. See, that is what it got. But this is not a base candle, right? This is a leg candle. That's why this area is easily violated. Same thing will happen even here also. Rally, base, rally. But it will be easily violated. So that's why I didn't draw 15 minutes zone. But what I did, I went to the 5 minutes time frame. In the 5 minutes time frame, here in this area, let me hide, I have seen a rally, 2 base candles and rally. That way I have drawn the zone. But is it a fine-tuned zone? Is it a fine-tuned zone? This rally, base, rally, is it a fine-tuned? No, it is not a fine-tuned zone. But can we plan a trade from this zone? If it is an aggressive trade setup, you can plan a trade. If it is not aggressive trade setup, you can't, because aggressive trade setup, some price action close should be there. But if you look into our NeoStock supply demand zone chain for this stock CAMS, I identified with the help of the software, this is a 5 minutes high liquidity zone. This rally, base, rally. After that, follow through candle. Because this is a very high explosive follow through. See, this candle looks small. Actually, this is a big candle only. This is good enough to qualify the leg out. That is what our software is also confirmed. But anyway, at present you don't have access to supply demand zone chain directly. You will not be in a position to identify rally base. And see the next follow through candle. Prices came and sharply moved. Again, a strong rejection moved from this zone. But prices came near to the digital line, right? Many times near to the digital line, it is like a tested zone. This zone will be violated. But remember, this is a high liquidity zone. It's not a normal zone. High liquidity zone may support multiple tests. Maybe in this candle, institutions might have added a new order flow in this. We may not be knowing. If you go to 3 minutes time frame, probably you get some better clarity there. 3 minutes also not very clear because 9:15 candle. At that time, if any new order flows are added, some more orders that won't be reflected in this candle, 9:15 candle. So anyway, I'm changing the time frame back to 5 minutes time frame. According to our software, it is a high liquidity zone. Rally to base candles rally. Already tested once here in the next follow through candle. And if you see further, again it gave you a test on the next day. This is on 16th April. See, this is on 17th April. 17th April, 9:15. Once again, prices entered. See, earlier it looks like price went near to the digital line. Did you notice? Many people will ignore. Yes, we ignore if it is a normal zone. And it is a tested zone if it is a normal. But it is not a normal zone. It is a high liquidity zone. See how sharply prices moved up. 925 gave a trade and sharply. It might have given you a huge intraday profit. This is on 17th April. So still today this zone is valid for us. Why? Because it is a high liquidity zone. High liquidity zone, we can keep on taking the trades until the day it gets the expiry. We have seen today we got Supreme Industries. See, the 5 minute zone got the expiry period today. That's why today it was violated. See, we never know when high liquidity zone will be violated. Only thing is until that zone, that the last time when last means the expiry date when it violates, until it violates, we keep on taking the trades and we enjoy the profits. The day when it is stopped out, we just ignore that stopped out because the loss is very minimal. It is a less than 2% risk only. See, Supreme Industries earlier gave you for 28th. Sorry, here 28th Supreme Industries, it gave you 5.1%. That's why when you get profits, you get good profits. But when the day is stopped out, the stopped out is less than 2%. Many times it will be around 1%, 1.1%, 0.9 or exactly 1 or maybe 1.2, maximum 1.3. Many times within that level only we get the losses. But when we get the profit, we are getting 5%, 6% ROA. Worst case scenario, 3% or 4% we are getting. So because it is a high liquidity zone, I have drawn this zone. Please remember, this is not a fine-tuned zone. Why this is not fine-tuned? Because earlier in 15 minutes time frame, excuse me. Okay. This is not a 15-minute zone. That's why you can't consider this as a 5-minute zone. Generally, we don't draw this zone because I looked into the software, I have drawn. Because I want to teach you this concept. How people are looking into this candle and drawing, because this is compared to this candle and this candle, this is looking small. Simply we are drawing. You can't compare leg in and leg out. You have to compare this candle with other candles on the chart. While comparing with other charts, if this is a tiny candle, then you can keep it in the base. If you consider this as a medium-sized candle, you can't keep it in the base. So that's why the moment I hide this large candle, and also I hide these gaps, now scale is perfectly aligned. Now clearly we got clarity. This is a medium-sized candle. See, this is the tiny candle. Even if this candle 100%, suppose if it 100% fill, still we consider this as a base candle. But this is not a tiny candle. This is a medium-sized candle. So leg candle you can't keep in the base. That's why 15-minute zone I did not draw. This is only 5-minute zone. It is an aggressive trade setup. It is not a fine-tuned zone. Okay, fine. Apart from that, here we have again a drop base rally. Let me hide the candle, you get clarity. See, this is a drop candle, base candle, rally candle. This is the 15-minute zone. Now again I need to fine tune to 5 minutes time frame. So as I already told you, This rally, 2 base candles rally, is a high liquidity zone suggested by our software, supply demand zone chain. Okay, and what about here? Here, this 15-minute zone picked up the orders from this rally, 2 base candles and rally. This is the one, rally, base, rally. Any risk management point of view, you can further fine tune the entry within this while planning the trade. But earlier it picked up the orders and moved up. But if you want to plan a trade in this horizon, first this high liquidity zone should be violated, and then only prices reach till this horizon. But before that, until it violates, we can enjoy the profits as long as it is giving the trades. But one day it will be violated. That day you get the stop loss hit. Okay, this is CAMS. And then next one is TI India. TI India, I think last class I already explained. This is the 75 minutes high liquidity demand zone. We didn't get a trade. Here it is having a fine-tuned 5-minute zone. Please refer the previous video. We discussed TI India. And the last one is Sun Pharma. Sun Pharma, we have a drop-based drop. 75-minute zone drop suggested by our software. And this one, when I fine-tuned with 15 minutes time frame, the structure, 15-minute structure, I am not at all comfortable. See, all these, a lot of consolidation took place here. Prices went, came down, and this is not a small candle, definitely. See, this is a... So that's why here there is no proper base to draw the supply zone point of view. But who push, and from where somebody pushed the market down? Who could be the responsible? That's why I went to the 5 minutes time frame. In the 5 minutes time frame, what happened? All of a sudden, trading view is very slow. Okay. See, in the 5 minutes, see, we have a rally, 2 base candles and a drop candle. Rally, base, drop. And this is the area, this rally, base, drop is the horizon for this entire 75 minutes high liquidity zone. And also LOTL scenario is created here. See, rally, 1, 2, 3, 4 base candles and a drop follow through candle. Even here also see, rally, base, drop is created after reaching. That means this is the area again institutions keep on adding new order flows. Moreover, this is the LTF horizon. So that is the reason why I have some interest to plan the trades from this 5 minutes area. But unfortunately, today price did not enter into the zone. So that way we did not get any trades today. If those who took trade, second trade in Supreme Industries, first trade you took on 28th February. Those who took the trade, second trade today, probably those trades would have been stopped out in Supreme. But performance point of view, that zone already gave you profit. So even the trade is stopped out today, we don't consider any impact for the performance statistics. At least one profit the zone should give, either today or previously. If not, the fine-tuned zones, we will consider them as a violated zones, stopped out. Then we will register them in our Excel sheet. So that's why performance point of view, no trades from all these zones today. This month, it's a different month. The trades also very slow this month. Generally, by this time we would have got around 30 trades or 35 trades. That includes stopped out and successful trades. But this month, so far, only 19 trades. Out of 19, 9 are stopped out. 10 are successful. The worst performance statistics in this month so far. But anyway, all these days we got good profits. This is one bad month for us. Very really bad month. The reason maybe because this month market volatility itself is totally disturbed. Because the one day market moved 500 points, next day another 1000 points down. That is what happened in the middle of this month. Now all of a sudden the rallying in Nifty. Look into Nifty daily chart. See, rallying, moving like a straight line. But did you notice who is the reason for this entire move? The reason is this is the fine-tuned area inside the pierced zone. This is the pierced zone strategy. See here, 75 minutes demand zone within weekly or daily pierced zone. See, earlier the pierced zone, we have a fine-tuned zone, another fine-tuned zone here. The first fine-tuned zone sharply moved up. And below that there is one more fine-tuned. That one is stopped out here and then picked up the orders, the one further below. And from here again moved. You know how many points Nifty would have given you? More than 1000 points. From here to here. Somewhere here, the time you got the trade, it is 21,803. Now today it is 24,125. From 21,800. Today 125. So that means 1,400 points move already it gave you. The pierced zone strategy. That's why we discussed pierced zone strategy is a powerful strategy. Here, we got, it gave you around 800 points from here to here. It's a big move. After that again prices sharply came down. At the time the price is down mainly because of this trade war. Due to that prices sharply came down. Now again see how sharply prices are moving. Okay. Probably it will reach weekly high liquidity supplies on any fine-tuned order flows. Probably again it will push the market down. That is one possibility. Here already base drop is here. The hidden zone. Maybe this hidden zone before may prevent prices entering into the weekly zone. That possibility is also there. We can't rule out anything. If tomorrow this base drop, if this hidden zone is violated, then from the weekly zone, prices will move down from this weekly zone. So for this weekly pierced weekly zone, here we have a weekly zone, a pierced zone. From the pierced weekly zone, prices are moving up so sharply. So this is what you can see in the Nifty. The pierced zone strategy. See, this is the monthly zone. We already analyzed this zone previously, monthly zone. Inside monthly, we have a weekly pierced zone. In the weekly pierced zone, a 75 minutes order flow is created during the elections declaration day, on that day. The 75 minute zone is created. Inside pierced weekly zone. And their daily zone is also there. Now from there it picked up the orders, gave 800 points. Once again it came. Below there is one more fine-tuned zone. From there again it moved up and gave you this time so far 1400 points move it gave you so far. If it reaches the 1500 points move complete. Suppose the price goes into weekly zone. Okay, anyway, this is the end of the discussion. Hope our analysis will be helpful to you. Let's all meet again in our next video. Thank you.